stop. If you're holding GE Aerospace, you absolutely need to see this data. Our AI radar has just detected a critical valuation gap. This industrial giant, is trading like a high-growth tech stock, and our entire system just flagged a major anomaly.
Look at this. The stock is trading at a 40 times price-to-earnings ratio. For a company that makes physical things, for an industrial manufacturer, this is a severe logic gap. It just doesn't add up, and the AI has flagged this for immediate analysis.
This is AI Stock Radar. We don't guess, we don't hope, we calculate. And today's target is GE Aerospace, ticker GE.
Okay, quick disclaimer. Data's from December 15th, 2025. This is for educational purposes only. Let's move. Right, let's get into it. The AI's whole job is to find these contradictions in the market, these glitches where the stock price has totally disconnected from physical reality. And here is the core conflict. On one hand, you have the market perception. Everyone sees a high-tech growth stock with a software-as-a-service model, and they're pricing it at 40 times earnings. But then there's the physical reality. This is a 100-year-old industrial giant that builds jet engines. I mean, the market is literally pricing GE like it's NVIDIA. It's wild.
And this is where the glitch is confirmed. The market's algorithms are actually taking negative news, like FAA safety directives, and reading them as positive catalysts. Can you believe that? They don't see risk, they see a trigger for more high-margin, recurring revenue. It's a completely backwards, structural bull signal.
Okay, Section 2, the bull case. We've codenamed this one Flying Alchemy. Let's analyze the data that's actually supporting this crazy high-tech valuation.
So the whole bull case is built on what the AI calls the SaaS illusion. It's pretty clever, actually. Supply shortages for new planes are forcing airlines to just keep maintaining their old ones. This creates a super predictable, almost guaranteed stream of high-margin maintenance revenue for GE. So yeah, it's a hardware company that's found a way to act like a software company. And the foundation for all this? It's an installed base of 45,000 engines all over the world. Think about that. Every single one of those is a long-term source of high-margin service money.
And get this, GE's free cash flow conversion is over 100%. Now, what does that actually mean? It means they are incredibly, almost ridiculously, efficient at turning their operations into cold, hard cash. This right here, this is the metric that validates the entire bull thesis. And all the while, their competitive moat is getting wider. Their main rival, Pratt & Whitney, is basically self-destructing because of engine defects. This is creating what amounts to an accidental monopoly for GE, and that gives them massive pricing power to crush inflation.
But of course, the AI has also calculated some pretty significant risk factors. So let's get into Section 3, the bear case, codename the gravity check. Okay, let's be real. The valuation is a huge outlier. GE is trading at nearly 40 times earnings, while the average for an industrial company is down around 18. That is an extreme gap, and historically, it's a massive red flag for a manufacturer. The technical charts are telling a story too. There's some major resistance here. The stock is coming up on a $300 ceiling, and it's like it keeps hitting its head. Without a huge breakout on massive volume, the probability of a double top rejection is really high.
But really, the core bear thesis is this one simple question. What happens if the market just wakes up one day and reclassifies the stock? What if everyone suddenly remembers this is just a hardware company? The drop back to a normal industrial valuation wouldn't just be a correction, it would be severe. So, the AI has processed both of these scenarios. You've got Flying Alchemy going up against the gravity check. The calculation is complete. It's time for the final verdict. And you know, the entire calculation really hinges on this one core finding. GE is a hardware company that has successfully created a recurring revenue model that functions just like a software company. That is the absolute key to the entire bull thesis. So here's how the AI's logic path works. Step 1. Confirm. The twin tailwinds from the aerospace supercycle and defense spending are just overpowering the macro risks right now. Step 2. Verify. That massive moat is getting wider thanks to their competitor failing and that insane cash flow. And so, Step 3. Conclude. The bull case simply has a higher probability than the gravity check.
So the final verdict is in, bullish. The calculation is clear. You need to monitor for a high-volume breakout above $299.81. Right now, the numbers favor the bull case. So, as always, do not let emotion drive your trade. Subscribe to AI Stock Radar for the next detection. Signing off.